Right, traders, welcome back to the channel. Here we have the GBP JPY chart in front of us, and we're going to be going over a case study, a bullish case study that was dissected within the community. I thought I'll share it publicly here at Liquid FX. So again, what we have over here is we have the weekly time frame over here. So again, we have our bearish structure over here. This is a bearish dealing range that we're working with. The dealing range consists of a swing high, which is up here. So this is our swing high. And we have a swing low, which is all the way down here. So now that we have our structure and our dealing range established, from there we need to understand where the premium and discount arrays are, i.e. the PD arrays. And so what we do is we project the Fibonacci tool from the swing high down to the swing low, just like this. And we have our premium up here and our discount down here. Now the fourth pillar is that we need to look for our fair value gaps. Where are the fair value gaps in the market? So this blue box over here represents sell side inefficiency, and this therefore results in our POI. So if we quickly drag price to the right, this is our weekly POI. So this is at the price point of 210.1. And now we have price that's heading towards that POI. So for anyone who trades GBP JPY, my overall narrative for the next few weeks and months is for price to get up to this level over here. So I do expect price to get up to this level. So now the question becomes, how can you position yourself to get into moves that support this narrative? And that's exactly what I'm going to be going through in this video. So if we go down to the daily time frame now, the daily time frame here paints a similar picture to that of the weekly. So if I quickly zoom into the most recent structure, the structure here is quite obviously bullish, right? We've had multiple breaks of structure. We've had 1, 2, 3, 4, 5 breaks of structure to the upside, and we have no signs of slowing down, right? The last few days, you know, the last week was a pretty bullish week from Monday all the way to Friday. Yes, we have liquidity that's been built over here. We have sell side liquidity that's been built over here, worth pointing out. And we have a daily POI all the way down here that left a fair value gap that's unmitigated. Now, what's the likelihood that price is going to do something like this? Sweeping this liquidity and heading higher? In my opinion, unlikely. However, it is a potential scenario, and my job is to give relative potential scenarios that could happen. And at this point, I don't think it's going to happen, right? So my overall target is, again, the weekly POI, which I'll repeat and even write on the screen, is 210.1, right? This is the next overall target for GBP and JPY. So now if we head down to the 4-hour time frame, we can begin to look for most recent structural highs and lows, right? So again, let's really slow it down and take it back a notch, right? So what we have, if we quickly clear the charts, let's have a quick clear image, right? So when it comes to dissecting the markets, right, any market in particular, what you're looking for is 4 distinct pillars in the markets, which is what we need to actually form a bias, right? When you form a bias, what do you need, right? You need 4 critical things. You need to understand the market structure, right? The structure can be looked at as a vehicle, right? Which direction is the market headed to, right? This is very, very important for us as traders to understand. Now, the second thing, once you've identified your structure, you want to look for the dealing range. So the dealing range we will go through is quite simply the most recent high and low that we're currently trading within. This is the dealing range. Now, the third thing we look for, now we're going into the ICT half of things, right? So the third thing we look for is we look for our premium and discount arrays, our PD arrays, right? So the PD arrays themselves distinguish whether we are in discount or whether we are in premium. So simply put, we want to be buying in a discount and selling in a premium. And last but not least, the final thing we are interested in is we want to see, or we want to know where the inefficiencies are or where the fair value gaps are, right? And we're going to go into that in a minute. So quickly go over the main 4 things we're going to dissect is our market structure, our dealing range, our PD arrays, and our fair value gap. So all these 4 things will be discussed now on the charts. So what we have over here is we have bullish structure, right? So we have bearish boss over here, sorry, bullish boss over here, bullish boss over here, and now currently we have a high over here. So our dealing range can be shown simply by projecting the Fibonacci from the swing low down here up to the swing high, right? Swing low up to the swing high. One thing to note is if we look at the most recent dealing range before us, what we had over here is we had price giving us a low and then a high. And notice how price came into the discount, right? We saw a discounted low just over here, and notice how we filled an inefficiency over here. So price, well, we just came shy of it, but we filled the majority of the fair value gap over here, right? So this is what we are looking for as traders, right? We're looking to fill buy-side inefficiencies, buy off them before heading higher, right? And we want to do this in a discounted region Very important to understand. So if we go to most recent price action, which is over here, again, what we have over here is we have a recent structural dealing range to currently work with, right? So if we bring the four things again, we have a structural dealing range to work with, right? So this structural dealing range consists of a structure from this swing low up to this swing high. So we have a swing low down here and we have a swing high up here, right? Very, very important to understand. So that's the first and the second rule done. Now, the third thing is the premium and discount are raised. So with this current structural dealing range we're working with, right, this is our equilibrium over here, right? This is the equilibrium. So anything above, we understand intuitively is a premium, right? And anything below, we understand intuitively is a discount. So with that out the way, now let's look for our POIs and therefore our fair value gaps, right? So we understand what are the three rules to a POI, right? How do we establish a POI? So the first thing to understand is that we are bullish overall, so our POI should be in the discount. The second rule we need to consider is the fact that every POI must leave an inefficiency in price. It must follow a fair value gap, right? So with these rules, you can't really go wrong. So we want to have a discounted POI. We want to make sure it leaves an area of inefficiency. And last but not least, it must quite obviously break structure to the upside, right? These are the three rules to a POI, right? So what we have over here is, yes, we have a break of structure. So that's rule number one, right? This arrow, let's label it appropriately. We call it a BOS or BOSS, right? The second thing we look for is we look for our inefficiencies or our fair value gap, right? So what we have over here is we have a fair value gap just over here, right? So the fair value gap I'm going to label in blue, just like this. This is an area of inefficiency in the discount on the price chart, right? So one thing I want to clarify is that a lot of people get this mixed up where they don't quite understand how to determine the actual POI. Well, it's simply the candle before the imbalance, right? If you follow that simple rule, you can't go wrong. It is a candle before the imbalance, right? So what you have over here is you have this candle over here, right, which I'm going to label in gray. And this here is essentially the candle before the imbalance, right? So this is the candle before the imbalance. And this now becomes our 4-hour POI, 4-hour point of interest or 4-hour POI. Okay, now from here, as you can see, we've seen a reaction off this zone. And as you can expect, we've seen price rally up. So from here, my overall bias for GBP JPY is ultimately to take out this high over here, right? So why is this high the next liquidity draw? So this is the next draw on liquidity over here, right? DOL, draw on liquidity. But why? Simply because we understand above every old high and above every old low, there's going to be, you guessed it, right? There's going to be liquidity. There's going to be buy and sell, well, in this case, sell stops, right? So this is a draw on liquidity because it's a weak structural high. Notice how we have the low, which is down here, and this low produced a new high. But this high over here has not produced any new lows, right? We simply failed to do so. So this is a weak structural high, right? This is a weak structural high, and it's a targeted structural high. Now from here, it's important to understand we also have sell side inefficiency over here, right? So we understand the market targets and rebalances areas of inefficiency. So here we have an area of inefficiency, which I'm going to label again in blue. This is an area of inefficiency followed by a weak structural high all the way up here. And so because of that, we understand that our overall narrative is bullish, right? We have a bullish overall narrative overall because of the reasons I have just dissected. So from here, if we go down to the 5-minute time frame, where we can begin to dissect sort of lower time frame structure and lower time frame behavior, right? So this is the AMD model over here, right? This is a trade you could have taken advantage of using the ICT AMD model, right? So how can you actually do this? So if I quickly get rid of this charts, right? Or sorry, get rid of the mess. Let's have a look at how you could have taken this trade, right? So this is not a trade I took because I don't trade this pair myself. But this is something that a lot of the members asked me to do, so I thought I'll make a video on it. So what we have over here is we have the Asian range to the left of your screen right here. This is the Asian range, right? So the Asian range is a low volume time of day that aims to build liquidity in the markets, right? It's as simple as that. The Asian range builds liquidity in the markets, right? So what we see going into the London session, right, is we see price sweeping the Asian range high. So this is the Asian range high that's been swept. So you want to ask yourself, what is the market achieved by sweeping this high, right? This now becomes our manipulation phase 1. This is manipulation phase 1. So what does the market achieve in this move over here? What does the market achieve? Well, let's label it. This is manipulation phase 1, and it aims to entice early buyers, right? Early buyers. This is manipulation phase 1. We see early buyers trapped and enticed in this region. So if we now follow price action along, right, this was actually a news event on the, I believe this was the NFP actually, right? This is the NFP news event, right? So the NFP news event is what drove price down. So we understand this volatility had a purpose, right? So you want to ask yourself, what is the purpose of this volatility? Well, the reason this CPI move is of relevance to us, sorry, this NFP move is of relevance to us is because it sweeps the Asian low, right? We see price sweeping and taking the Asian low, just like this. Asian low swept over here. So we swept the Asian high and we swept the Asian low and we produced what we call the Judas swing, right? Which is essentially the low of the day, right? So this is, let's label this sell side liquidity, right? Sell side liquidity. We see a sweep of sell side liquidity, which has formulated our Judas swing. This here is manipulation phase 2, or quite simply the Judas swing, right? Okay. So that being said, now that we've identified a sweep of liquidity and a Judas swing, right, what we are looking for now is we're looking for an order block to essentially enter off, right? So again, forming an order block has the same rules as a POI, right? When we form an order block, there's 3 things we're looking for in the markets, right? An order block must break structure, an order block must leave a fair value gap, and an order block must be priced in the discount. So we're already in a 4-hour discount, but ideally on the lower time frames, our overall structural range should also come into a discount when we buy. So that sounds complicated. Let's break it down. So what we have over here is we have price that's given us bearish structure to work with. So we see a structural low, structural high, structural low, structural high, structural low, and now we see the break of structure over here. So if we quickly label that, that's rule number 1. We've seen a break of structure to the upside, right? We've seen price break structure over here. Notice how I'm bringing the line, the arrow all the way across because we want to see price break with a body, right? Quick indication, we should see price break with a body. This here is a liquidity sweep, not a very accurate break of structure. This is an accurate break of structure. So that's rule number 1. Rule number 2 is we want to key off a fair value gap. We want to enter off a fair value gap. So where are the fair value gaps in price? Well, they're here, right? Notice how this wick and this wick aren't touching. And here we have our fair value gap, right? We have a fair value gap just over here. So let's quickly label that in blue so people understand. We have a fair value gap just over here. And remember what I said on the higher time frames, right? We want to use the candle before the inefficiency. So this candle over here, I would include the wick as well, to be fair. This region over here becomes our 5-minute order block. So this is a 5-minute bullish OB, right? So let's label that in gray and drag it across. This is our 5-minute OB, right? The last thing we need to understand is that we want to be buying in a discount, like I said, right? So we have a structural range to work with, right? This is a structural low and this is a structural high. And so from here, it's important to understand, we see that price has come into the discount below the 50% level. And this is where we want to be buying from, essentially below that 50% level like this, right? A safe stop loss will be just below the ICT Judas swing. And as you can see, this trade, for those who took it, well done, was a fantastic trade. You know, I think it even went up to a 1 to 10. So very high RR trade, right? Following the basic schematic of AMD, right? So notice how we have an accumulation, a 2-phase manipulation, followed by a distribution, right? So our job as traders is to identify the correct order block. And by doing so, you're able to catch the distribution stage over here.